Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. In today's video, I wanted to talk about a kind of underappreciated skill that I feel is very important for investing and trading stocks, and that skill is deciding when to sell your shares. Pretty much every video you see on YouTube about investing in the stock market is talking about kind of the researching process and when and how to buy stocks. And they don't really discuss why you would ever consider selling your shares. So in this video, I wanted to discuss the 5 reasons that I have that would kind of cause me to consider selling my shares in the future. This was a requested topic, so if you have a topic or a company you'd like me to go over in a future episode, there's going to be a tagged comment down below, so just reply to that with whatever topic you'd like me to go over in a future video. So since I haven't made a video since last Wednesday, I kind of wanted to discuss some of the major news events that I've missed since my last video. I woke up on Friday and was expecting to make a video and then saw that the market was closed and kind of forgot what day of the week it was, so didn't make a video on Friday. But the 2 topics I wanted to go over was the OPEC news from this weekend and then the discussion that's been going around about when the US economy is going to open up again. Also, it appears like my good luck streak is coming to an end. During the time it's taken me to write the scripts for this video, the market has usually jumped around 1%. And in today's video, during the course of me writing that, the market has actually fallen. So it appears like my good luck is kind of going away. So the major news event from this weekend is that OPEC came to terms to lower production. And as a result, the price should probably go up. But as I'm looking at it right now, crude is pretty much flat on the day, and it's still sitting below $25 a barrel. There's been a couple of news events in the past couple weeks about Saudi Arabia and Russia coming to an agreement on lowering production rates, but it kind of seems like it hasn't been really affecting the overall price of crude, so that's going to be something I'm going to be watching in the future. And right now it seems like the most important topic that's been going around for kind of the investing circles is when the economy is going to be opening up again. And depending on where you look, you're going to see a ridiculous range of answers. You can go online and see people talking about how they expect the United States to open up in May. And then Dr. Fauci came out with the possibility that we might have rolling reentry for the US economy. So it would be kind of prioritizing certain businesses to open back up and kind of go on a rolling basis of some things start opening up now as some have to wait until later. So as a result of news stories like that, there's been a lot of optimism in just kind of the overall market. And that's why we've seen an incredible recovery for the past 2 weeks. You have articles coming out like Goldman Sachs coming out saying that they think that the bottom already happened. And then you have response articles saying that's an absolutely foolish idea. I think that the bottom already happened. So depending on where you look, you're getting a wide variety of opinions on when the US economy is going to open up again. There's even been possibilities that things aren't going to open up for the next 18 months or waiting until the vaccine comes out for coronavirus. And from what I've seen, that appears like it's not going to be happening until 2021. So right now, all of these people talking about the possibility of opening up the economy again really don't have any validity to their claims. At this point, the only thing that will decide when things open up is either the virus starts to slow down its expansion or we figure out some sort of scientific cure. So all of these government officials coming out and saying that they hope things are going to be open by this certain time, I think you have to take that with a grain of salt. Everyone wants things to open up. Everyone's tired of being on lockdown. It's hurting families, it's hurting the economy, and people want to go back to their normal lives. But until we see an actual change in the scientific community, I don't think we're going to be seeing that anytime soon. So just kind of any news event that you see about a potential opening up of the economy, kind of take that with a grain of salt. You have to think about who's saying this and are they kind of the main figurehead about this topic. All right, before we get started, I got to say that I'm not a licensed financial advisor and I highly recommend talking to a professional. Someone that can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. When I personally look at the process of investing, I think it's really fun to do research on companies and you just have like an endless supply of companies you can look at and determining which ones are the best places to put your money. So it's always a really fun thing to hit the buy button and have the order go through and then be a shareholder. But it's not as fun to hit the sell button because it's either going to mean that you're closing out a position that was profitable or you're going to be losing some money. So it's not as fun of an experience compared to buying. But in this video, I wanted to go over the 5 reasons that I have for why I would consider selling shares, because a lot of people don't really discuss that. But I wanted to lay out my guidelines for when I go back and I'll look at a company and kind of reevaluate on whether or not I want to be a shareholder for the future. So the first reason that I would ever have to sell my position comes with a major change in the company that I own. And this reason I think is probably the most important reason I have and is applicable to pretty much every investor out there. And I'm not talking about some change like, a CEO gets fired or you have some scandal going on. I'm talking about major changes to the overall business. When you're doing research for a company, you're kind of figuring out what their business does, and the things you see about their company that makes you take a position are kind of the criteria for holding them for a long-term position. So if one of those criteria goes away, I think that's a huge red flag for why you should be selling your position. So kind of the first example I think of comes with Boeing, ticker symbol BA. Boeing is probably the leader in the airline industry. They do stuff with defense, they do stuff with commercial planes. And so when you take a position in that company, you expect them to be the leader in their sector and be a very stable company as they're part of the Dow Jones. But the news event of the plane crashes wouldn't have been the major change I'm talking about. The major change that I'm thinking of with Boeing is the fact that they have some internal problems and some inappropriate conduct from their members, and the fact that the FAA has shut them down indefinitely for the 737 MAX planes. So if you're taking a position in Boeing and expecting them to be pumping out planes, and having them be grounded indefinitely would be a red flag. So for me personally, if I owned Boeing before the shutdown would have had me really reconsider my position, because they're no longer the leader in the sector and they're not in a great spot. So they're going to have major restructuring for their company. So this would be the first reason that I would consider maybe selling my shares, if something like Boeing, where the main product that they're putting out changes and you have a major change in the company. All right, the second reason I wanted to talk about will kind of have some people with varying opinions on this one. This is just my personal opinion. So the second reason I would consider selling is called locking in profits. And the reason I would lock in profit is after an incredible move to the upside. The whole reason I made this channel is to kind of talk about the importance of having responsible long-term investments. And so the whole reason that we're investing in specific stocks instead of, indexes or just the overall market is the fact that we're trying to outperform the market. And on average, the market's been returning 10% a year. So if we're trying to outperform 10% and a stock moves up, 20% in one day, I think it's important to consider locking in profits. After you have a crazy move like that, you often see a pullback in the next couple days. So locking in profits can be a way to maximize your returns. One of the examples I think of has to do with the incredible movement that we've seen in the past couple months with Tesla. Say that you bought into the company at around $250, and the next couple months it shoots up to $500. You have a 100% profit, which is incredible. And so at that point, I think it's important to kind of consider the possibility that it's all speculation at this point. 100% move is very crazy for the stock market. So being able to lock that in is important. One of the kind of negative things about locking in profit is the potential that the stock continues to move higher and you miss out on further profits. I think it's important to kind of consider the fact that you're already getting an incredible return on this, and I think it'd be greedy to expect significantly more from a 100% move like what we've seen with Tesla. I've actually seen this greed for myself, and I had to watch it back in a video. And after I watched it a couple months after I published the video, I was really shocked at how greedy and naive I was. So I was trading a natural gas ETF, and at that point I was up 75%. And based off of my criteria for this video, I should have considered selling, because 75% is an incredible return. And in that video, I kind of joked about how things were going so great, and I wanted to see it hit 100% just to know that I had doubled my money on that position. Next thing you know, the stock is tanking, and by the time I sold, I was only making 25% profit, which is still incredible, but it's significantly less than the 75% that I had. And then I bragged about how good things were going, got very greedy, wanted 100%, and I lost out on a lot of profit. So if your goal is to be a responsible investor and you have an incredible move and return in a company, I think it's kind of important to consider locking in profits and maybe move your money elsewhere in the market. The third reason I wanted to talk about considering selling your position is if it makes you anxious or stressed out. And so I've learned this in the past from various positions that I've taken. And the two main things that I've learned from this is the importance of position size and understanding the volatility of the companies you own. Back in my early days of kind of day trading and swing trading, I would often put all of my money into one very volatile ETF, because in my mind, I've felt very confident about the technicals that I was trading. So why not put all of your money into one basket? And so when the stock started moving around 10% a day, it started making me feel very anxious and stressed out because of how volatile the stock was moving. And so when you have a company that's very volatile and it's only a small part of your portfolio, you can see the kind of small moves that it has on a daily basis and be okay with it. But when it's your entire position and you see your P&L for your entire portfolio go down 10% in one day, it started making me feel very stressed out and anxious. So at this point, I've kind of learned from those mistakes. And for looking at my portfolio, the most volatile stock I own, besides Bitcoin, is probably Snapchat. Snapchat is a company that I really believe in, but based off of the price movement that it's had in the past and the 100% gains that it had in 2019, I have a very small position size. It's only around 10 to 15% of my portfolio. My position is large enough that if it moves the way I kind of expect it to, I'm going to be rewarded with fantastic gain. But it's also small enough where if things go south and the market continues to fall and it drops 50%, I'm not bankrupting my portfolio just based off of this one position. So I think this reason is an important way to evaluate if your position size kind of matches your overall emotional resistance to the volatility that's involved with trading stocks. So if your positions are making you feel anxious or stressed out, that would kind of be a red flag for me and determine maybe you're investing in too volatile stocks or your position size is too large. So the fourth reason I want to talk about is mainly for swing traders or technical traders, and that is a break of pattern. When you're a swing trader, I've always kind of preached the importance of having an entry, an exit, and a stop loss. And that may not make a lot of sense for people that are just doing long-term investments. But based off the technical traders, you're not taking a position based off of the overall stability of the company. So when I go back and look at my position with Macys, it makes sense that I had a stop loss in place just in case things went south. Macys has been struggling heavily for the past couple years, and I found it on the charts and it built a very nice support around $14. And so when it pushed up above that, I called that $14 or slightly below that, probably around $13.50, my stop loss. So if it dropped below that, I would consider that a break of pattern and I would sell my shares. And so I let the position do its own thing, and after a poor earnings report, it dropped to around $12.75. And based off of that, it was a break of pattern and I cut losses. When I put up the chart of how it's moved since I sold my position at around $12.75, you can see the amount of money that I've saved from that decision to decide to cut losses. So that's why reason number 4 is a break of pattern would be a reason for me to sell my position. And the fifth and final reason I want to talk about for maybe considering selling your position is the fact that you need cash. And I think it's kind of gotten to the point where people know, when stocks go down, you don't want to sell because you don't want to take losses. But if you're getting to the point where your financial stability is kind of stressing you out, I think it's important to be able to sell your positions to make you feel more comfortable. This is really only applying to people that have normal investment accounts and not retirement accounts, because there are huge fees that you have to pay if you take money out of a retirement account before you hit 59 and a half years old. But I don't think there's any shame in selling your positions for a loss if you need the cash right now for an important expense or just to make you feel more comfortable with your daily life. This is something that I had to do at the beginning of this year. I was getting a little tight on cash and I decided to sell all of my stuff in Acorns just to make me feel more comfortable about my overall financial position. I just think it's kind of silly to be stressing about your overall financials when you have money that's yours that you've already paid taxes for sitting in an account trying to make you more money, even though it's stressing you out because you don't have enough money in your bank account. So I think it's important that if your overall financial situation is stressing you out, that you consider liquidating your positions to make you feel more comfortable in the long term. So those are my 5 reasons why I would consider selling my position at this current state. Based off of all of the research that I've done, I feel very comfortable holding all of my shares during this very volatile time. My position size is enough where I'll have significant returns if things go the way I expect them to, but it doesn't stress me out that, stuff like Snap will maybe drop 5 to 10% in one day. I'm totally okay with that. So in the investing community, especially on YouTube, you see a lot of discussions about the importance of, having the perfect entry point. But I don't see a lot of topics about when to cut losses, especially for a long-term investment. If you're a technical trader, it's very easy to decide when to cut losses. But for a long-term investment, people just think of, you buy and hold it forever until you eventually retire and you cash out. Say you have a huge change in your business, maybe something like Boeing, that would be a reason for me to consider selling my position. So let me know what you thought about my 5 reasons in the comment section down below, and let me know if I missed something that you think is very important for kind of determining when to sell your overall positions. Let me know in the comment section down below. Thanks for watching this video, stay inside, and I'll see you in the next episode.